What's going on, everyone? Welcome back to the channel. Today, we're talking about one of the most volatile and honestly one of the most fascinating stocks in the market right now, Hims & Hers Health. The stock just jumped over 28% in a matter of days, and naturally, investors are asking, is this the beginning of a massive breakout, or is this just another short-term spike before a pullback? As always, this is not financial advice. I'm just breaking down the data, the thesis, and what I'm personally watching. Part 1. Why this stock moves so wildly. Let's start with something important. This is not a stable stock. Hims & Hers Health is one of those companies that rips higher very fast, drops just as quickly, and constantly has headlines driving sentiment. One week, it's "this is the future of healthcare." Next week, "this company is overhyped." And if you're new to investing, this kind of volatility can mess with your head. But here's the key. You don't follow the noise, you follow your thesis. Part 2. My core investment thesis. When you invest in a company like this, you need a clear reason. For me, the thesis is simple. This is not a Viagra company. This is not just a weight loss company. This is a digital healthcare platform that's expanding across multiple verticals: hair loss, mental health, sexual health, weight loss, and now peptides. And that last one, that's where things get very interesting. Part 3. The peptide opportunity. Big deal. Recently, there's been a major regulatory shift. Peptides were removed from a more restrictive category, which essentially opens the door for more innovation, more research, and more commercialization. And here's the key. Hims & Hers Health already owns a peptide facility. That is a huge head start. Most competitors don't have infrastructure, don't control production, and are still figuring it out. Meanwhile, Hims is already positioned to scale. This could expand into preventative health, metabolic optimization, recovery science, and cognitive performance. In other words, this could become an entirely new revenue engine. Part 4. The weight loss strategy, marketing funnel. Now, let's talk about what's driving growth right now: weight loss, specifically GLP-1 drugs like Wegovy from Novo Nordisk. Hims is offering a monthly medication plan plus a subscription layer. Now, some people don't like the pricing structure, but here's how I see it. The drug itself is not the main profit driver. It's a customer acquisition tool. Once someone enters the ecosystem, they can be upsold, cross-sold, and retained long-term. This is exactly what companies like Ro did successfully. Part 5. Hers is exploding. Here's something a lot of people are missing. The Hers side of the business is absolutely taking off. It's climbing the App Store rankings, it's growing faster than the male segment, and it's benefiting massively from weight loss demand. In fact, it's now competing directly with Ro. This matters because it proves this isn't a one-product company. It's a multi-channel healthcare platform. Part 6. Global expansion means bigger opportunity. Now let's zoom out. This isn't just a US story anymore. Hims & Hers Health is expanding into Europe, Australia, and potentially Asia. And the numbers are big. US TAM around 280 million, Europe 200 million, Japan 100 million plus. They now have millions of subscribers globally. That diversification matters because if one market slows, others can pick up the slack. Part 7. Short interest is dropping. Important signal. Now let's talk about something technical but important: short interest. At one point, this stock had around 44% short interest. That's extremely high. Now it's dropping toward 35%. Still high, but moving in the right direction. And here's what that tells you. Fewer investors are betting against the company. Now, does that mean a short squeeze to the moon? Not necessarily, but it does mean the bearish conviction is weakening. Part 8. Valuation. Still cheap? This is where things get interesting. Even after the run-up, the stock is trading around 1.8 times sales. For a company growing 30%, 40%, potentially higher, that's relatively low compared to many growth stocks. Now let's walk through scenarios. If the company hits its long-term goals, at 3 times sales, strong upside. At 5 times sales, major upside. At 10 times sales, extremely bullish scenario. Realistically, though, the range is probably somewhere between 3 and 5 times, but even that suggests significant upside if execution is strong. Part 9. What I'm watching next. Heading into the next earnings report, here's what matters most. 1. Subscriber growth. Are they still scaling fast? 2. Revenue per user. Are they successfully cross-selling? 3. Weight loss retention. Are users sticking around? 4. Peptide updates. Any commercialization progress? 5. Lab expansion. This could increase long-term stickiness. Part 10. Final thoughts. So where do I stand? I'm still holding Hims & Hers Health because for me, the thesis hasn't changed. The growth story is still intact and the company keeps expanding its platform. But let me be clear. This is a high volatility, high risk growth stock. If you're investing here, you need conviction, patience, and a long-term mindset because this stock will go up fast, drop fast, and test your emotions constantly. If you found this breakdown helpful, hit the like button, subscribe, and let me know. Are you buying, holding, or avoiding Hims right now? I'll see you in the next one.